Hey traders, Chris Buss here with Traders Profit Compass with a mid-session update for Friday, December 3rd. It's 12:35 as I'm starting the video. Obviously, we've had a lot of selling this morning, but I wanted to give you a update on some key levels to watch in afternoon trade as we wrap up the week. And as you know, the weekly closing prices are really important to see if we can, hold the line or if we break key levels heading into next week. So let's take a look at it. Here we are on the SPY weekly. We had the bearish engulfing candle last week. Notice that the bar of last week totally engulfed like the last previous couple of weeks. And now we've got what looks like a confirming weekly bearish bar to follow up last week's bar. And that really didn't happen till today because we were holding above last week's low heading into today after yesterday's nice rally. So now we're testing this 450 area, and I really see that as the key level heading into next week. We really need to hold that, or else we're going to drop down below, and then that would target the 40-week moving average down here at 430. So this 450 area is really important, and you can see it here on the daily as well. We've got an uptrend line. We've got a support level at 450. Notice that that was the area of the previous high. So now we've had a breakout and a solid back test. That's fine. That's expected. That's normal. That's not a panic situation, but we are below the moving averages of the 8, 20, and 50. So from that standpoint, it's bearish, but we are holding key support right here at 450. And that's where we need to hold at the close of today. And I expect that to hold for the simple reason that that's what the market likes to do, keep everybody guessing heading into the weekend. Is it going to hold? Is it going to break? And to break it now would kind of open the floodgates for a move much lower. So let's see if they can hold that today. They've done it so far. So let's see how that goes today. Just moving down to lower time frames, you can see we've gone down, tagged that low of the other day, and now we've got a little bounce going on here. So, all out crisis averted so far. Obviously, that's a big rug pull this morning. Let's see if 450 can hold heading into the weekend. Moving on to the Qs. Again, same type of situation. We've got a bearish engulfing weekly candle last week, and now we've got a follow-up red candle this week. So that is usually an indication of a potential trend change. And we've got price sitting here right down at 380. We do have a little trend line coming in that may offer some support. I really think 380 needs to hold today, or else we'll probably go down and again hit this 40-week moving average down at around 355. If we go to the daily chart, you can see we've lost the 50, and we're sitting right here at this 382 level, give or take. That was the level of the prior breakout. So again, we've broken out, we've come back to back test that level. That'll be really important to hold because, as we've always talked about, that, once you break out, you don't want to fall down back below. That's a very bearish move. And, if we lose this breakout level, I would anticipate us coming down into the low 370s, this 372.5 area, and then potentially all the way back down to 355, where the 200 comes in. So that would be, that's a lot of, that's almost $30 to the downside if we were to break this, 380 area and then lose this 372 and a half. We have not visited the 200 in a long, long time. So that wouldn't be, totally out of the norm. And just remember the 200 more or less defines the uptrend. So that would be an area that, would be absolutely imperative to hold down at the 200. Looking at the 2-hour chart, and very much like the SPY chart, we came down to this level and have filled this gap, and we've got a decent little bounce. Now, unlike SPY, we made a lower low. Remember, SPY, we had held the prior low, whereas in the Qs, we have made a lower low, so that's obviously bearish. And I sent out well, here's that. I wanted to show you that bear flag action. Remember, I showed you that yesterday and made a point of showing it this morning. That bear flag action, once that 388 broke down out of the flag, then that opened the floodgates. IWM has held the prior low, but again, this is IWM is already below the 200, and I would anticipate that IWM at some point would come down and tag the bottom of the box at 210. And remember from our TA principles, breakout, back test, but then move back into the range, your target is automatically the bottom of the box. And as you can tell, this is well on its way of testing that low down at 210. Here's the 2-hour chart showing you that we did hold the low, and now we're bouncing along with the rest of the market here. And time will tell this afternoon whether that's going to end up holding or giving way into the weekend. Let's go through the generals, the FATMAAN names. Of course, these are the mega cap tech names that have done such a great job at holding up the market as far as the indices go. Facebook was really one of the worst. Why? Because it already had lost the 200. We talked about that in days past. And so once that was lost, then it was hovering here at 312, and then that let go today, coming down here towards this 300 level. That'll be a really important level to hold if it can. Below that, and I'll have to go out to a weekly chart to show you that. I'll do that over the weekend. But there's a big gap that was never filled down in the 285 area. So if we lose 300, then that would be targeted, in the weeks ahead to go ahead and fill that gap. Try and get Apple up here. Apple hasn't totally given up the ghost, but yesterday we had that news of iPhone sales possibly lagging for the holiday season. We came down, made a run at this gap, didn't fill it, bounced up to fill the opening gap, did that this morning. You can see that wick that went up to fill that gap, and as soon as it did, it reversed. And that's something to look for in your technical trading when you have a overhead gap and then price makes that technical move to fill it, check it off the list, and then it can reverse with the rest of the market. You can see it's coming here with this large volume over price bar here at 160 and a half, and that's where it has held the line. If 160 and a half were to break this afternoon, I would expect this price to come down and potentially go all the way to 157. Why? because we already got the bounce off of the first touch of the gap, which often will hold, and then the second run at the gap is the one where it's much more likely to fill. And then this 157 area will be very, very important in the days and weeks ahead to hold the line for Apple. Tesla, we said this morning this 1080 was going to be key. Really broke pretty quickly out of the gate, came right down here to our next level of support, did not even phase it, came down here to the bigger level of support down at 1005, 1005, where it is getting a bounce. If that level were to break, then it's going to come right back down here to 980 to test this this prior low. And really, given the structure of the whole thing, you've got a big down move, you've got a a flat bear flag, a breakdown. I would expect, just given the technicals, you might get a little bear flag action here in the afternoon, but then eventually come down to test this low at 980. That would be my guess, and that's all it is, but just an educated guess that it would probably come here and test that low, but we'll have to see. Microsoft, we said 330 was critical. We said, it's coming. If it breaks 330, it's going to the 50, and it has done that right to the dime. Hopefully, if you were attuned to that, had your alarm set, and took that trade, you're sitting pretty right now. As a lot of these are. If you had it alarmed and you were ready to take those trades, they turned out to be nice, fast winners for you. So kudos to you if you took that. So now you can see that there is a somewhat of a bar, volume over price bar here at the 50. That's going to be your line of demarcation for the next move lower. If it loses the 50, I would imagine it's going to come back here, honestly, all the way back to 305. You might get a little bounce off of the gap, but eventually I would expect this gap to fill and then it come right on down to 305 to test this breakout from 305 way back when. So I think the 50 is your line now. And hey, if you're not in that trade, if you're not short already, I think you can set an alarm there at 320 and be ready to go for the next leg down when and if that breaks. From 320 to 305, that's going to be a nice trade. Obviously not as good as if you would have entered at 330, but I think we're only halfway done with this corrective move in mega cap tech. Amazon, this is a 60-minute chart. We had showed this this morning and in the days past. We said this 3,500 was going to be important to hold within this consolidation range. It broke, came down here to 3440, 3440 yesterday, and then broke that flat bear flag this morning and has worked its way down towards this 3380 level and has found a little bit of support there. Honestly, this would be not an odd place for it to stop, but I think ultimately we're probably going to come down to this large volume over price bar down towards 3320, 3200, right down in this area, and then that'll be an important place to make a stand for the bulls. You can see that down here at 3300 there was support, and then support back in the chart. So I think we may get some bear flag action, closing into today. This might be it for today. But I think ultimately there's more downside coming down towards 3,300, and then we'll see where things fall after that. Google, let's see, I don't have that updated. Let me do that real quick. Yeah. Google, all things considered, is holding up pretty well. It has held the prior low of yesterday down at 2,800. That said, that's the good news. The bad news is that it's, of course, below the 8, the 20, and the 50-day moving average. So 2,800 is really going to be your line in the sand going forward. If it were to break there, I think you're going to come down to 27.25 almost immediately. Why? Because that's your big volume over price support, where you've had a lot of areas of support here in the past. You had a little undercut, but then it quickly recovered. So this 27.25 will be really, really important in the days and weeks ahead if this 2,800 were to break and make a move down here. And you notice we talked about it this morning that the 200 is all the way down here at 25.50, and there is an open gap yet to fill. So that's going to be important. Netflix is just, let's see, I don't have that one refreshed either. Let me do that. So we were up here at 620 this morning after that little doji candle yesterday. And you'll notice that on a lot of these mega cap tech stocks with the big bounce yesterday, we didn't see that at all in the FATMAAN names. Mostly doji candles and really a nothing day yesterday. And then, that didn't bode very well for today when the selling came in, because if they couldn't rally on yesterday's move, any kind of selling today was obviously going to hit them pretty hard. So anyways, we've lost 620. We're well below the 820 and 50 day, which are up here, and they've all taken a sharp nosedive down. I would expect that, in the days ahead, we're going to go ahead and come back down here to test the 200 at around 575, give or take, right down here. And then that will be a place that'll be really, really important to hold. Why? Because we've got this $90 trading range. Remember, we spent so many months, I think it was actually almost close to a year in this $90 trading range. And if we were to lose the 200 and then come back below 560 at the top of this range, you know what that means. It means the target is the bottom of the box, which is way down at 470. So that would be, pretty much a doomsday scenario for Netflix. SMH, we said 299 was the line. If you got this, if you were able, focused on it, to take this short, that was a very nice trade for you this morning. Notice that out of the gate, there was a big push up here, and then this morning we dropped down immediately and then lost this trend line. In either one of those locations at 308 or on the break of this trend line were places where you could have sold. And so now we're down here at key support at 299, and you can see that price has held the line right there with these support levels. Anything below 299 would target this gap down here at 295, and then you'd probably get a bounce off of that on the first touch, but then possibly get a kickback rally back up to 299 and then come down towards 292, and then that would test this prior low back here in the charts, and then that would be a super duper critical level. If we were to go out to a daily chart, you would see how important that 292 is. There's a lot of open air down below that. And you already know what I'm going to show next is the ARK complex that is just, letting go all over the place. No bounce yesterday. We were up here just a couple days ago talking about below 48. This was vulnerable down to 40 to 45 to test this prior low. It did that the other day, undercut it. We had the doji candle yesterday when the rest of the market was really rallying, and then today it has let go down into the low 40s. Now over the weekend, I will back this chart up and look at the weekly chart to look at potential downside targets. But I think suffice it to say, this is set up to go lower. Here's the genomics one that is down 10% for the week. We got involved here, or at least we're talking about it. Whether you took it or not, I don't know. But on this big symmetrical right triangle on the break of 70, set this thing up for a breakdown into this void with a measured move target down here at 45. And you can see that it's well on its way. There may be a little bit of support here at 55, but I think the floodgates have opened on all this, super high valuation bubble names, and for better for worse, that's what ARK is all about. Stocks with a lot of growth, but not a lot of profits to support it. So, and the thing is, with ARK, the way it's set up, they have significant ownership in these very illiquid names, and if they get redemptions or need to sell, it makes it even worse. It's not like you've got a Tesla where you can sell $50 million of stock. It just gets eaten up immediately and doesn't even feel it. When you get into these very illiquid names, smaller cap names, and you got to sell, and you own 10 or 20% of the whole company, it's gonna really affect it. So these names are really, really vulnerable in this type of environment. Going on to the ARK flagship fund, the ARK Invest fund. This is the one that has probably the most Tesla in it of all of the ARK holdings, and you can see that we tested this low the other day and broke below, and now with Tesla starting to break down, that's just fuel to the fire on the ARK, and it's down 7% today. So this is heading a lot lower, and just like the other names, I'm going to back this up to the weekly chart and show you over the weekend where we might be headed. And moving on to the ARKW, the web names, these principles keep coming back, breaking back into this trading range. The target becomes the bottom of the box. We found that immediately. We got a bounce. Then we broke it the other day. Found, a little hesitation here with a doji yesterday. And now we've come down right to where we thought it was going to test this prior low at 122.5. And so I will look at the weekly chart, because this obviously, if you were or it were to lose this low here, then the floodgates open again for the next leg down. And when everybody flees the ship at one time in these illiquid names, they just, I mean, they go so fast. You know, down 6% today. I think the broad market's only down, you know, I don't even know what it was, a couple percent or whatever it is. These really go fast. So hope you're keeping your wits about you. I think with all the, you know, the indexes beginning to lose or have already lost the 50, I think you've got to be very open for a run to the 200 EMAs, and don't put your head in the sand. Keep your eye on the levels, and if your stops break or your stops get hit, get out. You know, that first loss is your best loss, and don't think that, you know, oh, it's going to come back. It's going to come back. We're in a new FOMC paradigm of, you know, taper time. I don't think this has a lot to do about the COVID Omicron variant. I really don't. I mean, it's something that's out there. It's something that gets, you know, we found another case here. We found a case there. We found a bunch of cases in Mexico. That's all. I mean, that's fine. That doesn't help at all. But I don't think that is what all this is about. And when you go out to, you know, the Etsy's of the world that have gone from 315 to 220 in a week, I mean, that's not that doesn't have anything to do with COVID. It has to do with super high valuations. You know, those real high flying names getting whacked. So I think it has more to do with the Fed and a changing paradigm there than, like I said, COVID. So let's see how the afternoon trade goes. Look forward to a weekend update from me where I will zoom out to the weekly charts and kind of get a bigger picture of everything and see where that takes us. It'll be really interesting to see what the market does this afternoon heading into the weekend. So if you're new here and you like the analysis, I do my best to give you solid levels and guidance to help you in your trading. Please subscribe and hit the alarm bell. You'll get the YouTube content. Hit the like button and also jump over in the show notes. And there's a link there to the blog site where you can register for all my content. And then you'll get everything that I produce right in your email box. So thank you so much. Have a good afternoon of trade. This has been Chris Buss with Traders Profit Compass. Talk to you next time.